All right, guys, and welcome back to another episode of the Silver Stacking Podcast. We are finally back. We've been taking these breaks every now and then, but we are here. This is episode 11, and obviously, I'm investing with TJ, and I'm joined by wonderful, great co host
Silver Slayer. What's up,
Silver
Stackers?
Slayer. Yeah, so first of all, we're just hopping into it, just catching up because this is the first time we've actually seen each other and spoken to each other in probably, what, like a couple weeks, maybe,
Yeah,
I
like
would
two
say.
weeks maybe, because it was from the interview with BulionMax. So
Yeah, that interview was like a couple weeks ago.
yeah,
And I mean, I'm already noticing some differences here. First off, your new silver stacking loft is like definitely being built out now. Now you probably have
yeah,
already shown that on your channel, but I really like that
eh,
background you have there.
yeah. I've seen other people with those panels, and I was like, dude, those look awesome. Like they're not what you would think. They're like actually plastic. Like I thought they would be like more like noise reduction, but it's more for like just looks. So
Yeah, yeah. But no, I mean, I think they, and even with your setup over there, the bookshelf, I think they say that depending on how you set up your room for audio, some of it can be used for like diffusing and stuff
oh
like
yeah, that
that
makes
with
sense.
the
Yeah, that
sound
makes
waves.
sense. Yeah,
So, hey, you can, that could be a part of the strategy there.
yeah.
But obviously, my setup is a little bit different. So, just letting you guys know, I am getting a new Mac shipped. My old laptop was pretty much old. Well, this is the one that I'm using, but it's so bad that I can't connect a good camera to it. Otherwise, it starts getting really, really laggy. And honestly, sometimes on this laptop, I can get kind of laggy just using the normal camera. So, with the new Mac, it should be a lot better. But overall, guys, these past couple weeks have obviously been insane in the silver market. So we're going to get into all of that. We're going to talk about the price swings. We're going to talk about silver demand with everything happening at the U.S. Mint. We're going to talk about the Fed raising rates. But first, you know what we got to do. It's pretty much customary at this point.
Right.
We have to shout out BulionMax. Now, as you guys can see here, BulionMax actually has a pretty interesting note here. When billionaires want gold, they buy this. Now, Silver Slayer, are you aware of this type of
Yeah, those are
gold?
that's the Volcambi. So you see those little squares right there?
Hmm.
They come in like a pack of like you can get them like up to 100 and they break off in little 1 gram pieces. So you can keep
Oh,
them in that square, but you can also break them off as like fractionals, which is pretty cool. Or they obviously come as like the 10 ounce or the 5 ounce. But yeah, for silver, a lot of people do. They'll buy these like that whole like set because they're like kind of connected almost like a Kit Kat bar connected, but you can like
yeah.
break it off. Yeah, it's really cool.
Whoa,
So
I didn't even know that. That's actually really cool. Like,
yeah.
yeah, it can be divided.
Yeah, for like
That's pretty
fractional.
interesting.
Yeah.
And then looks like it says obviously there's an assayer that you know I guess solidifies its value. So guys, BullionMax again, shouting them out because honestly, they're one of the best online dealers that we've worked with.
Yeah.
And we had that amazing interview with Sean last time. So I
And
mean, oh, go ahead.
oh sorry. And they got your 2015 Panda right down there. You see it?
Oh yeah, there it is right there. I didn't even.
You love that thing.
Man, man, that is crazy. So like,
Yeah.
like that. I mean, honestly, that must. I mean, it must go to show that this panda or this coin right here must be extremely well loved.
Yeah, it
Given
is.
this particular one right here
Yeah. That's
on
why
the
I
front
gave it to
page.
you, bro.
Yeah, man. No, I 100%,
That's why I
100%
gave it to you.
appreciate that, man.
And
Um,
also with Bullion Max though,
mhm.
they still have the starter kit. If you go to bullionmax.com/silver slayer. So
Yeah,
yeah.
man. BullyMax, they're, I mean, I think the thing I really like about them is that, obviously they're kind of like newer on the scene. So they have that energy of like a startup. They're
Yeah,
almost like this like
yeah. It's like a
startup
college
online
team. It's like
dealer.
a college basketball team or whatever versus like the NBA, where like the college
Yeah.
teams always like push way harder.
So yeah, they're willing to make all these different moves, and it's again all to the benefit of everybody here. Like obviously, whenever they're like, "Hey, let's do the silver starter kit. Let's do this thing where we're working with Silver Slayer." I know you guys have some um, what was it like? You guys have like
Oh yeah, the
another additional one
deluxe.
that you're doing, right?
Yeah,
Yeah,
they're still
yeah.
working on that. Oh, and I found out what they're sending us next. The silver. I don't know if you want to know
Oh man.
yet
Oh no, I
or
actually just surprised me, man. I actually
okay.
don't want to know.
Yeah, I
Yeah.
showed my moderator and he was like, "Bro, I gotta get one of those." I was like, "All right, I'll give you one, bro." But yeah, it's sick. It's really sick because it's always the newest coin. So, they haven't even came
Yeah.
out yet, I don't think. But yeah, it's cool.
Man. Oh man, I can't wait.
Yeah.
And oh, dude, before we even get into all of this, man, I got to update you. I've been so one of the reasons why we've been kind of like off and on a lot with our channels, like on me, I've been traveling a lot. I've been even on my channel, the last video I put out was on Tuesday, May 3rd, I think. And I've just been traveling from Washington, going to Denver, Colorado a lot. My job is in Denver, but they've been flying me out and stuff. But I was sitting at my desk in Denver, and the guy who sits next to me, my first week there, all of a sudden I hear him talking. I hear him like just kind of whispering to somebody and saying words like premium price, and I'm like, wait, what? Just
Oh,
think of like a corporate kind of job,
right.
and you're sitting there with like a tie, and all of a sudden you're hearing people say words like that, and it's not at a financial job. So I'm just like, what's going on? So I turn and I'm like, hey, are you talking about precious metals? And he was like, yeah. He was like, do you collect? I was like, yeah, I do. And
Like I have a channel about it.
yeah. And he was just like, he's like, yeah, so I'm just trying to tell, it was his supervisor about, investing. He was talking about just, what coins have the best premium. So that's why he was saying premium. And after his supervisor left, we were talking nonstop for about a good
Really?
hour and a half. It was like after 5, and we were like
That's
still
crazy.
there talking about silver and stuff. And he was showing me his Instagram and showing me all of his like pictures of his stack and stuff. So he's a part of like that Instagram stacker
Yeah,
community.
there's a huge and I have an Instagram which like did is big because I rarely post on Instagram, but when
Hmm.
I hop on, I'll be getting tons of new um followers on there and like I'll see like just tons of different posts of some really cool stacks. So yeah.
Yeah. So he was showing me his, and he was telling me about. And honestly, I can't. I've seen it before, but I always forget how to say the name. I think it's Una, and man, it's like a bar, but it has this picture of like this woman on it, Una and something. But he was telling me he has like a bunch of those in gold
Is
and
it
some
the
in silver.
hold on. Una moment
It's
something?
like a.
Is it the old Libertads? What the old Libertads?
Oh, he did show me those Libertads. He actually
Yeah,
does have a few.
the old school version. Those look dude, the old school version Libertads look so sick.
Yeah, man, this dude was like heavy
It's
into
the
it.
Onsol, but
He was like, yeah, I spent like 5,000 on this. I spent 4,700 on this, and I'm just like, man, this dude is like dropping. So,
yeah,
and he's full on understanding everything that's happening with like, the inflation, Federal Reserve. So we were getting really nerdy, and also
yeah.
this guy, he was like, yeah, I studied economics in college, and he was like, my whole idea was I was gonna go to Wall Street, but then he's like. I met people on Wall Street and then I hated them. So then he was like, I went into real estate. And then he was like, turns out all the people in real estate act just like the people in Wall Street. So then he's like, all right. And then, he became much more of a stacker. Though he did say that he was stacking since he was a kid too, kind of like you, Silver Slayer. But just cool random story, that, you're at work and you're not thinking that you would ever talk to anybody about silver.
Right.
And then lo and behold, someone's, talking to you about it.
That's pretty cool.
Yeah.
That's so crazy. If
So
he
you never know, guys. You might be working with somebody who might be a silver stacker.
yeah,
You just never know. But
that's crazy.
and obviously, right now is a really advantageous time to get into silver. If you guys have pretty much been living under a rock, then you might not have known about uh, everything that's. Can you still see my screen, Silver Slayer?
Yep. Yep.
Okay, you can still see that chart.
Yep. Or no, it
Okay.
says economic daily news right now.
All right. Yeah. Let me
Oh,
move
now
that
now
back
it comes
over.
up. It's on. Or
Cool.
yeah, it's
Cool.
the yeah. It
Perfect.
shows a couple different charts.
Cool. So here we have silver and we have gold, but obviously over the last month, the prices have really come down. It really started happening middle of the month, and before I mentioned that it's a really advantageous time to get into silver and gold, and particularly silver, obviously. And one of the reasons why is because we just saw this huge price dip come down. So obviously, it's a great time to start considering, backing up the truck. Now, I myself am looking to really get into it now. On my channel, I'm planning on doing some silver giveaways, so I definitely want to start buying a lot right now
Yeah.
for that. Um, but obviously, premiums are going to still be an issue. But many people might be wondering, well, why are prices coming down? Well, before I kind of get into pulling up some additional charts and everything, let's just zoom back out a little bit and just take a um, pretty much just see like where exactly the momentum and fundamentals were going into 2022. So before 2022, we were seeing that hey, inflation's taken off, CPI is taken off, and then we're starting to see okay, some of the components of CPI are starting to rise as well. And on my channel, I was saying, hey, I expect the first half of uh, 2022 to be pretty good for silver and gold. And then the second half, prices should start coming down a little bit. The reason why is because I was saying around this time that I expect the Fed to start raising rates, I expect inflation to hit its peak. And then by the end of, and now when I say inflation, I should say CPI. CPI to hit its peak, and then CPI to begin to start coming down a bit. Now, this is just my opinion. It's not probably not Silver Slayer's opinion or maybe anyone else's opinion. But the reason why I say that is because of the denominator. And what we're seeing now is prices really coming down in April. Now, I did say probably for a few months that I expect May's announcement to be the start of this because the denominator went from like a really low number to a higher-ish number within a matter of a month. So for me, I'm like, all right, cool. I think that we're going to start to see some potential weakness in CPI growth. So with that, we're also getting, the Fed raising rates. They already started in March. They made another announcement recently, and they raised it by 50 basis points. Now, let's take a look here. As you can see, and then we're going to scroll down. Um, the I'll scroll back up actually. The Fed basically raised interest rates or the federal funds rate by 50 basis points, and they traditionally only really raise basis points or raise the federal funds rate by 25 basis points. So people were like, if they raise it by 50 basis points, that's a huge sign that things are getting really, really bad. So that's what they did. And now, and this is also something that we've been looking at on this channel, and we've been showing this particular chart right here, which are the target probabilities for what the Fed may possibly do. Turns out, when we were showing this last time, and it was pretty strongly weighted towards 50 basis points as opposed to 25, the Fed, started raising rates by 50 basis points. Now, it looks like the Fed might be raising it by 75 by June. So if we scroll
Jeez.
down here, if you take a look at the target rate, so if we were to raise it by 25, that would take us to about the 100 to 125 range. Currently, we're at um, uh, roughly around 75 ish. So 75 ish to 100. And if we go up 25, we'll be at 100 to 125. If we go up 50, we'd be at 125 to 150. But take a look here. They're only pricing in 17.1% of that being a probability. The real heavily weighted probability is at 82.9, and that's 75 basis points, taking us to 150 to 175. That would be a dramatic rise. And I don't have the numbers here to show it yet, but I don't know of any time that the Fed hiked interest rates by 75 basis points in one meeting.
What do you think
I
that
need
would
to
do
look
to
that up.
silver? Like
Well, I think
where do you
right
see silver
now,
sitting at?
so check this out. I don't know if you can see this here.
Yeah.
And this isn't necessarily heavily weighted to the Fed funds rate, but I would say more so heavily weighted towards the balance sheet. But right now, the Fed is looking to offload their balance sheet pretty aggressively while aggressively raising rates. When you raise rates, it more so attacks the shorter end of the yield curve. So think like, you know, 1 year, 2 year, so on and so forth. When it comes to the balance sheet and then, you know, offloading mortgage-backed securities, offloading treasuries and stuff, that's more so the longer end, and that would be much more of what is affecting the 10-year yield. Now, the 10-year yield, inflation adjusted, just crossed above the um, zero line. So we are actually currently in positive real rate territory. We're no longer in negative real rate territory. So this is also weighing heavily on gold and silver. As you can see here, prices are down pretty aggressively. Uh, we were at 25.50. I think at one point it almost looked like we are going to hit $27 in
Yeah.
silver, and now we're all the way down to 22.36. So taking a look at my forecast model here, I inputted all this information. What I like to do is first start off with gold and then add that to silver, because some of the, I would say, two or three of the heavily weighted inputs here tend to be Bitcoin, gold, and real rates. So I updated this for this video, but I would say maybe 2 or 3 weeks ago, when we were at negative real rates, when Bitcoin was a little bit higher, and when GLD volume was way higher, this whole range, the upper limit was in the high 2000s. Now we're at the mid 1900s in the upper limit. Central limit's at 1848. If we scroll down here, this is where we are currently right now. Uh, Currently, prices, spot price, we're recording this on the weekend, so it's not moving. But the current spot price is 1882. So that's just above the central limit here. Now, if we take 1882 and then if we plug that in to silver, the upper limit is 2276, central is 1978, lower limit is 1680. It really won't change it that much, and you'll actually see why. Um, but SLV volume actually isn't as strong of a determinant for price as much as GLD volume is. And we'll actually talk about this a little bit later too when it comes to actual physical demand and in gold and silver. But the same thing is true for um, the paper demand as well. You start to see similar signs of, um, I guess I wouldn't want to say herding behavior, but there are going to be
Selling though.
people.
A lot of people sold um
Exactly.
recently. It's just so
But
silly why that is.
I think honestly, it has nothing to do with the true stackers like you and myself.
Yeah, no.
I think it
Yeah.
has more so to do with, and here's something that a lot
Traders.
of people may not know, but a lot of institutional investors, meaning people who work at banks, hedge funds, what have you, these guys have to meet a certain yield, and they can't, and they have they may have a certain cash balance that they can't exceed. So whereas you and me and other stackers, we may start stacking, or we may just hold on to cash and just not do anything. I mean, we might wait for a less volatile time because many people look at this time as being extremely volatile. Um, Whereas an institutional investor, they may look at this time and be like, Well, we can't do that because our mandate states that we can only be 5% in cash at any time. We have to put our money somewhere. We have to put funds somewhere. So if Tesla's doing crappy and, you know, this thing is doing less crappy, we're still going to lose, but this thing is doing less crappy,
Hmm.
but we have to put money over here anyway. That's essentially the way that they move money around. Whereas for us, we can be like, you know what, things are a little bit too crazy right now. I'm just gonna hold on to my stack. I'm gonna hold on to my cash. I'm not gonna do anything. I'm just gonna wait until things are less crazy. But as you can see here, uh, volume went up month over month and hit a peak in March. But then we start to see that begin to mean revert in April. So far, April has about 702 million as far as volume is concerned, and the monthly average is 305 million. So I'm just gonna put in 702, 1, 2, 3, 1, 2, 3. That brings it up a tiny bit, so it doesn't really make much of a difference. What really makes a difference is, let's say for example, if I move Bitcoin to 40,000, whoops, now it jumps up to like $23.
Mm.
Um, and I would say probably the more impressive one is gold. If I move this up to about 1950, it also moves it up to $23 too. So if you put those two things together, obviously it's going to
Yeah.
move silver's price pretty aggressively. So if gold goes down to 1800, expect that band to come down as well. So here's the thing. What I'm basically saying is gold is gold's price movements really tied to CPI and the real yield for the 10-year? And most people say, yeah, it is. So as we're seeing the real yield begin to rise into positive territory, if the CPI begins to kind of slow down its rate of growth, again, not saying it's going down, but slowing down its rate of growth, then we may start to see gold continue to come down a little bit more in price. If that's the case, we may say, well, silver may come down in price a bit as well. So that's just something to keep in mind, especially going back to answering your question. This is like a long roundabout way to answer your question, Silver Slayer. But if the Fed continues to raise rates, that means we can only expect raise rates and also offload their balance sheet. We can only expect this to continue rising into positive territory. Because again, if the Fed decides to raise rates and they don't offload their balance sheet, they're basically just inducing the yield curve to invert, which is what they don't do. So every time they raise rates, they gotta offload the longer end, so that way the curve kind of looks like this, or it's still just kind of flattish. So as far as where gold and silver are going, I think as far as the spot price is concerned, not the real price including a premium, which is what we essentially stack with, I would expect spot price to continue to experience some weakness. But that's just my view. Let me know what you think. I am a bit of a nerd when it comes to this stuff.
Yeah.
So, let me
I
know what
mean,
you think.
I agree. Like, I mean, I don't expect silver to explode anytime soon, and I hope it doesn't. But yeah, I mean, I like how you can bring that aspect, from the actual data. But there's also, so many unknown variables, like a wrench could get thrown in.
Oh yeah.
But
Like a war. you
yeah,
know?
right, exactly.
Because that,
Um,
that actually took me off my target. Because I thought,
yeah,
all right, like I wasn't expecting huge, crazy growth in February, but
yeah,
after that war hit, oh man, like
yeah.
you can't predict a war.
Right, right. Just like all the forecasts from like 2019 going into
Hmm.
2020, no one could have ever predicted a global, situation. I don't want to say the word, but
Yeah,
uh,
yeah.
but but yeah, there's also something else I wanted to say during that.
Hmm.
When I'm like I covered a lot of articles about all this stuff, and most times, almost all the times, they'll tell you to back off from silver when it's low, but when the price is rising, they'll say get into it. And I just think that's so backwards,
Yeah.
like why did that? It was a Kitco article, he was saying, if gold or if silver continues to drop down, just stay away from it. But if it was up to 27, 28, the article would be telling everyone to get into it. And
Right, right.
I just don't know why that is. And it just doesn't make sense. But I guess it would make sense more from the banker standpoint, like you said, how sometimes banker will go to like the less crappy one because they still have, you know, to meet quota or whatever. So I don't know.
Right, right.
I just think that's interesting.
I think that's the main thing. It's like if you're speaking to someone who has to meet a certain percentage, like say for example, pension funds, right? Pension funds, and I know we might have some people who are watching who are a little bit older who may actually have a pension. We don't have pensions, but we don't have defined benefit pensions. We can do defined contribution, but defined benefit basically means your company basically is after you retire will pay you a certain guaranteed percentage every year in retirement for a certain amount of time. Now, to guarantee a return is pretty crazy. Like imagine I come up to you, Silver Slate, saying, "Hey, if you invest in this thing with me, I guarantee you'll get 10% every year." You'll probably be like, huh? You know? Um, so I think for most people, you know, you have a little bit of uh, there's little bit of speculation there.
Yeah.
Um,
And rightfully so.
yeah, yeah. So here's the thing. So basically, these guys have to have those kinds of targets. Now, if you're including um, you know, all the crazy surprises that can happen in the macro into your strategy, you know, there's a lot of volatility that can come from that, and you don't really know what's going to happen month over month. So, I guess all that to say, for them, they're essentially kind of like, all right, I don't know if we're going to make it, so we just got to put our money here. We got to put our money here. We can't just hold on to cash because we got to make sure that we're giving them the guaranteed return that we said we're going to give them, no matter if the world is going to crap, no matter if things are really weak in
Yeah.
the markets right now. We have to give them the guaranteed 10% return no matter what. So, that's why you start to see these fund flows into these random asset classes, or I shouldn't say random, but just different asset classes that just kind of seem like, well, wow, these banks usually kind of crap on gold and silver, or like this hedge fund usually craps on gold and silver. Why are all these people going to gold and silver now? Well, it's because they happen to be, or at that time, they happen to be the one asset that was performing really well back in March, back in February, you know, where like stocks were just doing really, really bad. So, you know, I think for people in that frame of mind, it makes sense for that one Kiko article, that one person saying, "Hey, stay away from it because it's doing really badly right now." But for us, it's great when prices come down, so that way we can get it at a lower
Right.
price. You know, um, but I know a lot of people don't think of it in that way because there's this, they always say generally like human beings are the worst investors because
Yeah.
we buy high and we sell low,
That's
where it
that's
should be the opposite.
Yeah, that's validation. People need validation to see it going up when true silver stackers know it will, Like that's just a lack of faith.
Exactly.
Like they need confirmation of, oh, I need to physically see it rising for me to think it's a good and like good idea, which it's silly,
I've had
but
people in
yeah.
my comments section too on my channel saying like, they're just, I mean, uh, I would say the majority of people are really positive, but there'll be like one or two people who are just kind of like, I can't believe it. Like, why are you, talking about silver? It's like the worst investment ever. I'm like, what are you talking about? Like,
Yeah.
you
But they'll
know,
go on to stocks and say or like, it's like it I don't know,
it's
man.
insane, man. It's like, yeah, and then like, I, I just think, when people, I want to actually, honestly, I think that's one of the reasons why I really like this podcast because we're actually able to talk to people and tell them, hey, silver's looking really, really good right now, or hey, things are looking a little kind of, kind of weak, or hey, here are the facts. You may think it's weak, or you may think it's great right now, but let's just present you with the facts so you guys can take that and run with
Right.
it, as opposed to, just saying things one way, because if things go against that one person, i.e., if the price is up and then it comes down, they're gonna be like cursing your name and saying all these crazy
Right.
things like, "I can't believe I got into silver. This is terrible." Da,
Right.
da, da.
I literally have a video posting in an hour and a half, talking about this same topic. I did that Reddit article or the poll titled "When will silver hit $100?" and 299 people voted, and the majority was 2 to 4 years. But there was a lot of people that said one or less, 1 year or less, and I was like, yo, I really am worried about those 78 people that really think silver is going to hit $100 in a year or less. Like
Yeah.
that is misguided, false, in like I don't want people to have false hope, like an unrealistic expectation, because that will dramatically, influence the way that you're investing.
Right, right. And I know
But
it's exciting,
yeah,
to like see the charts go up and everything like that. I mean, it makes me excited. I mean, if I'm being honest, but at the end of the day, you know, it's just a matter of just keeping a cool head, having a long-term strategy, and making sure that you know what your long-term strategy is. Because many people
yeah,
actually don't have one. They just are, hey, I'm seeing everybody going into silver. Wall Street
right.
silver just gets created on Reddit, and oh, I hear people are talking about it. Let me start stacking.
It's called a silver stacking strategy. Oh, sorry, I thought.
Exactly.
Yeah, it's called a
No,
silver
no, no.
stacking strategy.
100%. And so that brings me to an article like this because, again, this is on Kitco. U.S. Mint sees gold demand drop 43% in April. Silver demand drops in 23%. Now, for me, this is actually advantageous. The reason why is because going back to my silver and gold forecast model, if we were to talk in, essentially run a parallel with SLV volume or GLD volume, GLD volume got extremely high back in March, and then it dropped pretty dramatically in April. So the thing about that is that it had a huge impact on price when it dropped so aggressively so quickly. Um, Now, obviously, silver demand didn't drop as aggressively, and we saw the same thing pretty much happened in SLV. They're talking about physical here, but when it comes to when it comes to the paper silver, you kind of see the same thing kind of happening. It was a less dramatic drop. It went from 800 million to 700 million, whereas for gold, I think it was like 305 million. Now it's down to 190 something million, or something like that. Oh no, I think it was like 380 million. But anyway, it dropped down pretty aggressively on the paper side. So on the physical side, you're seeing the same kind of breakdown as well. Now, again, for me, when I see something like that, I'm thinking, okay, great, people aren't that interested. And when people aren't interested in the asset, that's when I want to get into the asset. So, because usually the price won't be as high.
Yeah,
You can say the same thing about houses. You can say the same thing about stocks, what have you. When people are fearful, that's when I'm going in.
yeah.
I
When
think Warren
most
Buffett
yeah,
actually had a saying like that, right?
yeah, when most people are buying, you should be selling. When most people are selling, you should be buying. Yeah.
Exactly.
But
So
I mean, we had record-breaking sales like this year, so to see it drop isn't too crazy in my opinion, just because we set up such a high bar. Um, but yeah, I mean, it was inevitable that it would drop at some point. But I mean, 20, yeah, like you were saying with the graph though, um, a lot of people are fearful right now, which is a perfect entry point.
all right, so the U.S. Mint sees gold demand drop 43% in April. Silver demand drops 23%. So here we go. After a strong start to the year, bullion demand for gold and silver from the U.S. Mint fell sharply last month. Now, honestly, I feel like they're probably breathing a sigh of relief because these guys
Yeah,
could not get a hold of silver to save their lives. So they're probably like, thank God no one, or thank
yeah,
God this demand is dropping because we can't handle this right now. Um, but continuing, in its latest sales numbers, the U.S. Mint said it sold 88,000 ounces of gold in various denominations of its American Eagle gold bullion coins. Sales are down more than 43% from March. Now, remember, guys, I said March was that same month where we saw that record high growth in GLD volume, the paper version. So again, when I say looking at paper volume along with physical prices is a nice parallel because A, you can get that data pretty easily, and B, the movements of gold demand and silver demand in the physical form seems to run parallel with that paper form. So let's continue here. Meanwhile, annually, compared to lackluster demand in 2021, sales are up 128.5%. So sales are still up. Silver demand is also down sharply, with the U.S. Mint selling 850,000 1 ounce American Eagle silver coins. Silver coin demand dropped 23% from March. For the year, silver demand is down nearly 92%. Silver significantly underperformed gold last month as prices dropped to more than 7% last month. The gold market saw only a rough 2% drop in April. According to some analysts, bullion sales suffered last month as investors reacted to aggressive monetary policy tightening expectations from the Federal Reserve. So we already talked about that, guys. The U.S. central bank's latest monetary policy decision will be released on Wednesday. So this article obviously came up before that. Markets see a nearly 100% chance of a 100 basis point hike, which is what we got. Markets also see the Federal Reserve raising rates by 75 basis points in June, and that's pretty much what we talked about earlier. So it seems like a lot of people are clocking this potential 75 basis points move in June. So if that were to be the case, that means we could see potential headwinds. But let's see what else they have to say here. Analysts also noted that volatile prices and robust premiums kept some consumers on the sidelines. As we know, premiums have been pretty crazy. The sharp month over month drop in gold demand came after the US Mint saw its best March performance since 1999. That's insane. The total demand for the first quarter of 2022 was 426,500 ounces of gold. Although the bullion market faces some challenging headwinds as interest rates rise, which is, obviously what we've been talking about, analysts still see solid demand through 2022. So, again, demand has come down, but as you can still note, the gold price is still pretty high. It's at 1880. So we're not at like 1600 or anything like that. We're not at 1500. We're still at 1880. So when I say gold and silver prices are coming down, that doesn't mean they're coming down in absolute terms. They're coming down relative to where they were. So, yes, prices are coming down, but we haven't hit that bottom yet. I don't think we're close to the bottom at all right now. We're still just a month or so off of prices spiking pretty aggressively. So, continuing, Juan Carlos Artigas, global head of research at the World Gold Council, said demand for gold bullion is expected to remain healthy as investors look for safe haven assets. Inflation concerns are top of mind for many investors, so we expect bullion demand to remain well supported through 2022, he said. So, I kind of agree, but again, I kind of am thinking that we will start to see some uh, I would say I would expect continued price pressures to hit gold and silver, but I don't expect premiums to come down as aggressively as we've seen spot prices come down. But what do you think about that, Silver Slay? Do you think
yeah. Well,
premiums will still remain elevated?
yeah, because I mean, this is just Eagle. This is just investment. This is the investment, not the industrial sector, like which is a whole different. Which I think is going to be interesting to look at, since the U.S. Mint might be making tons of sales, but compared to demand total with the industrial sector, I'm curious, like, what percent that's going to play moving forwards as let's say in 5 years total demand is like 3 billion ounces, because in 5 to 10 years that's when automobile, every company's EV, solar panels, let's say like total industrial sectors pulling like 2-3 billion ounces. What would the US Mint be pulling? Would more, since more people probably would be going
Hmm.
into Eagles, but
That's a
you
good,
know,
that's actually a really good question.
yeah, because I mean, industrial versus investment demand is, I mean, obviously the US Mint is a fraction of what total is, which was what 1.112 billion ounces this year. The point I was making is that I also am curious that the US Mint is going to start to become more on the back burner compared to other coins. A lot of people are starting to push away from Eagles because the premiums are so high. Like I was watching, I saw like at least 2 or 3 videos where people were saying like don't buy Eagles anymore. Like Eagles are the worst coin because the premiums are so high. You can get much better coins for cheaper premiums. And since Eagles are probably the one coin where the premiums are going to keep rising the most, um, I'm curious to see how that plays out because they sold 5 million ounces the first month of January. Like that's insane. Like I don't know if they'll be able to keep up with that, and literally keep up with the demand, but also I'm curious if the supply will keep up as well. So
Yeah, and if in a couple years we start to see industry really take off, that's going to be a huge competition for the US Mint. And here's the other thing too. There's no precedent for that. This is a huge sea change for essentially the world if pretty much everyone globally, industries within these countries start going to more EVs and going into metals. Now, here's the thing. From what I've read, the US Mint happens to contract and outsource um, the creation of their coins. So a lot of they used to hire people in house to create their coins, but they outsource that now, and they um, they they do that based off of a contract by saying, hey, we want X amount of silver at a time, or per year for, let's say, 5 years, for example. Just throwing out a range. So for 5 years, we want X amount of silver per year, or there might be a certain amount that they allocated. Now, what if that amount is not enough to meet demand because everyone and their mother wants
that's what
silver?
happened. That's what
You know, and
happened in
that's pretty much what happened
2020.
this time. Yeah,
Yeah,
so
yeah,
imagine if everyone starts getting interested in silver because they're hearing about everyone,
yeah,
Tesla, Elon Musk, everyone. Uh, but commodities essentially are going to be on everyone's mind, in my opinion, for the next few years, if
yeah,
not longer, because they're going to be saying, well, I keep reading about, my favorite Twitter purchaser talking about, hey, there's not enough lithium, there's not enough copper, there's not enough aluminum, not enough silver, none of any commodity that we need to put into our cars. And because of that, uh, a lot of people are looking at these things as potential ways to essentially, not essentially like us, but some of these guys are just looking at it, hey, I want to earn an extra buck. I hear I can put my money into silver. I'm going to buy some silver shares or something,
yeah,
ETFs, and that's going to help run up that price.
yeah,
So if the U.S. Mint isn't aware of that, or if they can't forecast that well enough, they're going to be behind the curve. So
yeah. That's
they're going to
exactly
have
what
a hard
happened.
time. Yeah, yeah.
Yeah, because they guesstimate the next following year how many coin or ounces they'll sell, and if they're wrong, they're screwed. And especially like trying to guesstimate when you don't know, a lot could happen in a year. Like that's what happened from the global situation in 2020. That's why they ran out, because in 2019 they couldn't have predicted that that would happen in a year. But I think imagine in like 10 years when every automobile company is electric, and 5G towers, solar panels, silver lithium ion batteries. Like silver's in it's going to be needed to an extreme level. By that time, it will be undeniable that silver is one of the most important things. Like that's when silver's true value will shine, when people realize that. And that's also why I say like $100 silver could be here by like 2027, because by that time we'll be full into it. There's like right now we're barely even starting. Like the silver shortage isn't even really starting yet. We're just starting to
Right.
see the first signs from like the U.S. Mint announcing it, or something like that. That's not even really the beginning yet. So imagine by then it's going to be inevitable for them to especially like the industrial sector, when they realize US Mint announces it, but when everyone globally realizes the severity of it, that's when I see like like exploding silver prices. So
Exactly. And I think, you know, the commodity super cycle that we pretty much entered is it's going to be, in my view, unprecedented. You know, the last time we had one was in early 2000, and that was largely attributed to China being welcomed into as a world trade partner, and they became essentially the manufacturing country of the world. And now we're entering this other phase or this new phase where it's not just a country, it's industry. It's a and it's multinational, or I should say, or supra, that's the word, supranational organizations like the IMF or just pick the name, they're all concerned about climate change. And because of that, that trickle down effect is it hits all these different industries who then say, hey, we're going to go into electric vehicles. Hey, we're going to go into solar panels. Hey, we're going to go into this, that, and the third, because that is what's going to meet that goal that the IMF set, that the World Bank set. And this is going to be a global wave as opposed to just one country, which was China. Though China is a really big
right.
country, but the U.S., I think even China itself made this goal of being carbon is
Yeah.
either carbon neutral or zero carbon by
Zero is
2050 or
like,
something like
yeah,
that.
zero net emissions by 2040.
Yeah,
But yeah, a whole bunch of, yeah, which that's going to be interesting because I mean,
yeah. And honestly, before I would have said, you know what, I don't know how they could do that, but if they have the technology to, um, really take advantage of the green economy, then they're already well supported by the commodities that they have within their borders. They have pretty much the majority of the rare earth metals in their borders. So for if it comes to electronic, if it comes to vehicles or EVs or anything else, they have those rare earths. Like I think 80% are within their borders. So they have the capabilities. It's just, is their technology going to be there to meet that,
yeah,
natural product or natural materials that are in their soil. Um, so again, not just them, but the U.S. is trying to do it. Europe is trying to do it. All these countries and regions are trying to do it. So it's going to push silver and a lot of other metals over, even things like, especially metals like copper, for example. So and obviously there are going to be some metals out there like nickel, who doesn't really have as much demand as other metals right now, relative to its supply, which is one of the reasons why we saw it spike so high because of what was happening in Russia. And during that time, we saw a lot of people talk about the connection between Russia and gold. And I know Silver Slayer wants to talk a little bit more about what a lot of us were talking about maybe about a month or so ago, which was, hey, is there a potential for Russia to eventually connect their currency or back their currency by gold? Or who knows, maybe they'll have a new currency backed by gold. But
yeah, they
what were
did
some of
it.
your thoughts there?
I covered an art. It's like 15,000 views that they
Yeah.
went back to the gold standard, and
Was it recent?
Yeah, like I made a video like 7 days ago. It has like 15,000 views that they are, but even the article said they think it's going to be extremely short lived, and that's what like when I read it, I thought like few different things. I was like, one, it's going to be like some like crypto back gold or something like it. And two, if they do, it is going to be very short lived. I don't think that's like sustainable. But I never thought a country would actually be able to do that. But it makes complete sense why Russia would. I mean, right now, they're on the brink of a collapse, and gold is what would secure a country. So it makes a lot of sense. I just don't think that that's possible. Like Donald Trump jokingly mentioned bringing back the gold standard, but he was joking, right? Like that was a joke. Like I don't know. Like
Yeah, I
that's
think
interesting.
honestly, the one thing that uh like you said, I think if it, that move is likely a short-lived one
Yeah.
in our current times, mainly because not it has nothing to do with the fact that obviously gold, silver, they're sound money. The problem is it's sound money in an unsound world.
Yeah.
So the central banks right now they move in an unsound way. So the idea is hey, we want to be able to control price stability. And in order for us to do that, we need to basically manipulate our currency. Meaning, if the value of our final goods and services is X, and we're potentially heading into a deflationary territory, we need to start, exciting the markets again, which means we need to start printing money. And when we print money, we will artificially inflate the value of those final goods and services that were transacted in our economy, which is what we're seeing right now. So essentially, um, what we have is, you know, essentially the whole world, not just the U.S., but they all are engaged in, controlling and printing their own money via their central bank in order to control prices. You can't do that with gold. You can't do that with Bitcoin. You can't do that with silver because they're only a finite amount. You have to find more gold. You have to find more silver. You have to, I guess, put something in the code for Bitcoin in order to increase
Right.
the amount.
Well, you can't.
That's the only.
There's only 21 million Bitcoin ever that are like
Yeah,
that, and there's already like 17 million that's been mined. So when they're all mined, there will literally be none, like no Bitcoin left ever.
exactly.
Only way you can get it is if you buy it off someone. But yeah,
Right. And a lot of people equate those times of sound money. Now there are pros and cons to having that kind of a government when it comes to a world economy, because some people say, well, hey, that means we might be more prone to violence. So the idea is if this country has all the gold in the world, then we need to essentially go to war with them so we can take that gold, because that's going to be the only way that we can capitalize our economy and grow our economy. That's one of the reasons why we had so many countries back in the 1500s, 1600s, going into Latin America, going in and doing trade, and really just kind of just
yeah,
just straight up bogarting the gold so they
yeah,
can
killing
bring it
everyone
back.
and yeah, killing everyone
Exactly.
in like Vikings and
Yeah, because like literally, it's just like that is money.
yeah.
These are resources, and this is how we can trade. We can use this to trade with Asia for those textiles or India for those spices. They aren't going to take anything else. We got to use
Mm,
gold. We got to use silver.
mm,
So, however, now because you can print, there is potentially, or there, I shouldn't say potentially, but there is effectively this um, this view that okay, well, that actually prevents um, violence internationally. Well, domestically, I think it actually makes things pretty rough when you're printing money, because you're going to have people who are going to essentially take advantage of that and say, hey, well, if they're printing all this money, I can buy all these assets with it. Whereas there might be a larger swath of people who may not know that, and they get left behind, i.e., the haves having more and the have-nots having less, and the middle class becoming smaller and smaller, and then you're having this huge divide. So there are pros and cons to both, but I think right now, as far as where we are currently, just in today's day and age, I would expect anybody who is on any kind of sound money, I expect it to be short lived because it's hard to get off. It's hard to get off the
Yeah.
crack, man. It's hard to get off the pipe of easy currency. You
And
know, like
they probably meant for it to be short lived because like the ruble recovered right after they did that. Like it worked basically, but that might just sit for the war. That might just be their little like security insurance play, just to make sure they aren't literally collapsing. So I don't know. It's interesting. It was really interesting to read that and get into that situation, but
exactly, man.
we never seen this before, so we don't know. We can't even really like speculate like could it work or how long or what would happen, So
Right, right. But so here's the thing. I think it's great, or I think it's cool to, note when countries are going into gold and silver. But in my view, I think it's almost like, hey, if we are our own bank, it's almost, I almost kind of, I shouldn't say want, but when central banks are actually printing money, it incentivizes us to continue stacking gold and silver because as they're devaluing the paper, we
yeah,
can just say, all right, cool, I'll just go and get the real stuff. It incentivizes us to continue stacking. So as long as they continue doing that, then my strategy still stands of continuing stacking. Now imagine if the U.S. began to you know uh, back our currency by gold and silver again. Then you could say, well,
it'd be a fixed price.
yeah, then you could say, well, that means I can redeem my dollar
Yeah,
for X amount of gold. So technically, I
that's what
wouldn't
Russia.
need
Yeah,
to stack. I could take this dollar and I could go and redeem it for
yeah.
gold or redeem it for silver, which is what it used to be.
I forget
But
what price they set it as. I forget what it was, but I would be curious to see if the United States did that. What price? Because wasn't it like $50 or something like real cheap back when we were on the gold
yeah,
standard?
at a certain point it was $20 for one
Yeah,
ounce of
like
gold. For one
yeah,
ounce of gold, which is
yeah,
insane to think about nowadays.
yeah,
And one dollar for 1 ounce of silver. So, but of course it changed too. There's a point where it went to $35
yeah,
for 1 ounce of gold. But on face value, you used to have things like silver dollars. You could exchange a dollar for, theoretically, you could exchange a dollar for silver coins. So, um, in a world like that, technically you don't have to uh, stack, but in a world that we live in right now, you're almost incentivized to because it's
yeah,
like if I just only hold dollars, I'm I'm shooting myself in the foot, you
yeah,
know.
yeah,
So in a world of low interest rates, a large amount of cash sloshing around, you have to go to assets. You have to, and of course, you can diversify in any way you want. You can go into your biz. If you're a business owner, that's technically an asset. So you own an asset there. If you are uh, obviously a stacker, you have assets here. If you have a uh, pension or whatever, you have an asset there for stocks or bonds or whatever. If you have real estate, if you live in your home, that's an asset right there. You're essentially incentivized to go into assets. That's why we have asset bubbles right now, because inflation and interest, well, I should say interest rates start out were so low for so long, and they've been going lower for so long, it's been incentivizing people to slowly put their money into things that can give you a higher return. A lot of people don't really realize that, but if you go back to, let's say, the early 1980s, and just take a look at where interest rates have been going. They've been trending down. As they've been trending down, you've been seeing assets rise aggressively. You've been seeing money just go into other things pretty aggressively. The rate of costs, for example, have been rising aggressively because all that money's just been sloshed around because it's been made easier to get. So it essentially incentivizes you to get into assets. So, a lot of people aren't comfortable with stocks, a lot of people aren't comfortable with bonds, so on and so forth. But obviously, I think it doesn't, we don't really need too much convincing when it comes to silver,
Right.
obviously. But
And it's so much
um,
easier too.
it's easier. It's easier. You can just go
Yeah.
down to your local coin shop, and just buy silver that way. You can
Right.
go and press a few buttons, go to BulionMax and get some silver that way. It's so easy.
Yeah.
And
Yeah.
it's probably one of the more fun ways because it's physical. You can take a look at the
Yes.
artwork and it's beautiful.
Yes. Yeah, I just made a video, a hand video just showing off some of my silver. And
Yeah.
man, dude, just playing with it. Like every time I take a lot of it out and just like play, it's like it just reminds me like, man, like how it's so cool. So
Dude, I actually am so glad prices have come down because I cannot wait to start getting more silver, man. So, guys, this has been the episode 11 of the Silver Stacking Podcast. A pretty long episode, probably.
yeah,
Um,
very
but I
long.
think very action-packed, very informative. We haven't, spoken to you guys in a while, so honestly, kind of makes sense that I was a little bit on the longer side.
Yeah.
But definitely appreciate you guys watching. Make sure you check out episode 10 where we did an interview with BulionMax if you haven't checked that one out yet. But thanks again for watching, guys. I'm investing with
Yep.
TJ,
Silver Slayer. I'm out.
and we're out.
Peace.